So this is the chart of S&P 500 for calendar year 2024. And what you can see is that it is very nicely up 12% going from January till about end of May. But what surveys are showing is that half of Americans think that their portfolios are down. So what is happening? I mean, if the market is up and portfolios are perceptibly down, what does it mean for the investors? It means that the markets are heavily polarized. Major indices like S&P 500 or Nifty have become polarized. What do I mean by that? That some of the stocks of these indices are performing so brilliantly that the index has been pushed up despite them not having so much weight in the index, and most people are not holding those stocks. For example, Nifty has recorded 15% gain in the last 12 months. This is from 1st of June 2023 to 31st of May, just before the elections. Now, while Nifty has been up 15% in 1 year, which is again, I mean, not such a great deal, but just for comparison's sake, we want to see what the 50 constituents of Nifty have done in this time period. And you will be very surprised to know that the top 15 Nifty constituents have delivered 58% to 106%. So top gainer has been NTPC, Coal India, Bajaj Auto, uh, and even stocks like, for instance, ONGC, BPCL, who nobody could have imagined would be delivering this kind of 12-month performance, have done so. So 58% to 106% returns per share, and the top 15 out of the 50. Whereas overall Nifty, it has performed only about 15%. Now, these are the worst 15 of the Nifty portfolio in the last 1 year, where you can see the worst one has been Kotak Bank at minus 16%, Levers at minus 12%, Asian Paints at minus 10%, HDFC Life minus, and so on and so forth. And even TCS has performed at 11.6%, coming in the worst 15 category. So there is one category which is super performer, right at the top. There is a category which is underperformer right at the bottom, and there is a middle path, middle ground, let's say about 20 stocks which are just around the average, you can see. So many folks would have placed their bets on popular names, Levers, HDFC Bank, TCS, and all these guys. But underperformance from such stocks has resulted in a situation that your portfolio is not gaining that kind of returns which the top gainers are gaining. So even if Nifty gained 15%, and let's say your strategy gained, your portfolio with some popular names gained 12, 13, 14%, still you are missing out on the big potential of gaining from Nifty stocks. So imagine now there's an analogy of the horse race. There is a race of 20 horses going around, and there are many rounds to this race. Now, four horses are leading the race. Four horses are at the end of the back of the race after, let's say, few rounds. And then there is 12 horses are in the middle. Okay, so 20 horses, four in the front, 12 in the middle, four at the back. Now, if your portfolio consists of these four horses, obviously you will feel like that you are not keeping up with the pack, because every day you will hear about these horses who are really running ahead. So the challenge, as you would have guessed, in this kind of a race is to how to identify stocks which are remaining in the front. And even if I were to say that some of these horses from the front pack may fall to the middle, and some middle ones may go to the front. So after each round, you basically are remaining with the strength in the market by doing some rebalance in your portfolio. So after some time, when you find that one of these stocks which was really performing last 3 months is not performing anymore, it has slipped back, and but some other stock has now started to replace its place, you will replace that stock. So you will not stay stuck with those popular names that are being loved by everybody. There is no question of any emotion in this entire exercise. So now another example where Nifty, after it dropped from 2008 levels, it it crashed almost 65%. Then in the next couple of years, it recovered the entire loss and then went sideways. So for a period of almost 6 years, Nifty net was flat, starting from the peak of 2008 till about mid of 2014. Now, when you look at Nifty in that period, you can say that nobody is making money. Nifty has been flat point to point, January 2008 to mid of 2014. But in the same time period, while Nifty was flat or flattish, there were sectors which were phenomenally successful. Nifty FMCG running 169% in that same time period. Nifty Auto running 124%. Nifty Pharma running 140%. Nifty IT up 97%. So while Nifty is flat, some components of Nifty are really racing forward, and some components of Nifty are really underperforming. So you had 89% drop in real estate. You had 58% drop in infra stocks. You had 41% drop in public sector enterprise stocks, 21% and 29% in PSU banks and energy. So there is a pack that is racing ahead. There is a pack that is falling behind. And if you see over the years, the weights of each sector are also changing very dramatically. So not only the popular names may underperform, they may also have larger weights, which may accentuate the underperformance, right? Of course, they can accentuate the overperformance also if they are overperforming. For instance, BFSI, which is banking and finance, used to be 10% of Nifty. Over a period, it has increased to almost 37, 38% of Nifty. So if BFSI is not performing today, and you hold more stocks in that sector, then your portfolio will obviously trail, right? You will not be able to generate the alpha. There were, oil and gas used to be 19, 20% in 2001, 2. It has dropped to 12% now. For instance, telecom used to be 7, 8% in 2004, 5. It is now 2% only. Media is virtually wiped out. Engineering goods not there now. Cement remained stable. Automobiles have gone from 4 to 9% and still back to 5%. So weights of various sectors are going up and down also. Now, what is the momentum game here? The momentum game here is, for instance, this is the last 2 years of data of various sectors. So you can see Nifty is up about 40% last 2 years. Bank Nifty is up 43%. IT is down or actually up plus 9% only. So much lesser than Nifty. But CNX Auto is up 111, real estate 160, public sector enterprise for PSU banks are running amok. So there are always sectors that will continue to outperform. There will be sectors which will continue to underperform, and you would have to find which are the winners of the race. For instance, in this public sector enterprise index example, if this chart was presented to you at this point of time, with public sector enterprise stocks having been in this range for almost 15 years, you would not have the gumption to buy anything here, right? I mean, this every time it goes to this range, it just drops off, right? But see how it would have performed later. That I'll show you. At this stage, for instance, PSU banks, not many people would have bought it after the COVID rise, because it has gone up so much. It is kind of becomes counterintuitive how to buy it at that point. Real estate index, again, after having dropped in 2008, 9, always remaining in this range, you would not have possibly bought it here. But we unnecessarily create bias against a stock or a sector just because they have not performed in the past, and the recency bias of what has been performing remains fresh in our mind. If momentum is in public sector enterprise stocks, then we must utilize that regardless of what we assume of that sector. So rotation in market leadership is a very, very common phenomena. What we are seeing today, the sectors that are leading may not do so a year later or 2 years later. So there is going to be an automatic rotation in stocks, and we will not be able to pinpoint that exact change when it happens. Suddenly you will find some sectors are coming off and some sectors are going or performing better. And only if you have a proper mechanism in place which dispassionately, non-emotionally is able to calculate on a quantitative basis how and when to get out of any sector and how and when to get into any sector. And that momentum actually identifies and rides the new leaders. So this is the power and the beauty of momentum that is there, where you will be able to seamlessly move from one wave to the other riding each wave, riding winners, getting rid of your losers, and not having any attachment with any particular sector or stock. Thanks for watching. Bye.